There's a reason your perfect entry got stopped out at the worst possible time, then the move you wanted ran without you. The market isn't random within the day, it follows a rhythm. Quarterly theory says every session breaks into 4 90-minute cycles, and each cycle plays out the same 4-stage script. Trade against the active quarter and even a textbook setup will fail. Today, the 4 quarters, the true open that resets each cycle, and how to time entries with the rhythm instead of against it. Here is the framework. Every 90-minute cycle delivers 4 quarters, each lasting roughly 22 minutes. Q1 is accumulation, price chops in a tight range while large participants build positions. Q2 is manipulation, a fake move that sweeps stops in the opposite direction of the intended move. Q3 is distribution, the real move where price expands aggressively in the intended direction. Q4 is reversal, price gives back some of the move as positions are unwound. Every session, every cycle, same sequence. Watch one cycle play out. Q1, price coils going nowhere fast, accumulation. Q2, a sharp dip below the Q1 range, sweeping every stop sitting under support, manipulation. That's the head fake that gets retail short. Q3, price expands violently in the opposite direction of the sweep, well above the Q1 range, distribution. Q4, the move stalls and price pulls back as positions close out. If you entered on the Q2 sweep instead of after it, you got run over. If you waited for the Q3 expansion, you caught the real move. Here's how it scales. A 6-hour regular session contains 4 full 90-minute cycles. Each cycle has its own AMD, but the cycles themselves stack into a higher time frame AMD across the day. The first cycle is often the day's Q1 accumulation of the daily move. The second cycle delivers the manipulation. The third is distribution, the daily run. The fourth is reversal. Fractal at every scale, same sequence, same logic. Pull up any 30-minute NQ chart and you'll see this play out. Mark the start of each 90-minute block from session open. The first block almost always shows that coil and a sweep. The second block produces the real expansion. The third often consolidates. The fourth retraces. Stop trying to be the first one in during accumulation. You have no edge against the algorithm there. Wait for the manipulation to complete, then trade the distribution. That's where the math works for you. Now the trap. Quarterly theory works because real liquidity is delivering the cycle. That means the regular sessions of liquid futures or equity indices, not low volume overnight or holiday tape. On thin sessions, the algorithm has no fuel to drive the quarters and you'll force the framework onto noise. Mark the session opens, respect the liquid windows, and don't trade quarterly theory on Christmas Eve. Context is everything. So, every session runs 4 90-minute cycles, and every cycle delivers AMD plus a reversal quarter. Wait through accumulation, sit out the manipulation sweep, take the trade on the distribution expansion, and trim before the reversal. Trade with the rhythm and stop hunting you. Subscribe for the full method and trade your own plan. Education, not financial advice.